What's going on, everybody? I'm Gilberto from Credit Guys, a show where we talk all things business credit, and finance related. So today's video topic, I kind of want to bring it back and basically talk about the fundamentals of credit, right? What is your credit, how to utilize it, how to grow it, and how to manage it properly. So if that's a topic that interests you, please be sure to stay until the full video, like, subscribe, and without further ado, let's get right into it. What is credit, right? If you're a United States citizen, then you know, and you've tried to apply for a car or a mortgage or even a credit card, then you should be pretty familiar with what credit is and what it's for. Here in the United States, we have a scoring model, right, that basically lenders use to tell how trustworthy you are in terms of how likely you are to make payments on time, how likely you are to pay back debt that you've been borrowed, and things like that. And so what we see today in our business is that a lot of people don't actually monitor their credit correctly, right? They think that using free credit monitoring apps, which is a good place to start, but it's definitely by no means the best way to monitor your credit, right? Things like Credit Karma or Credit Sesame or Wallet Hub, any of those free credit monitoring services, they're not really credit monitoring services. They are products. They're trying to sell you different services, right? Different affiliates to different credit cards and loans and things like that. So it's not a good place to start to gauge what your credit score is. My two top recommended apps are going to be MyFICO, right? It's the top scoring model that most lenders use. So myfico.com, it's a little bit pricey, but it's definitely worth it as it gives you a very accurate breakdown of what your credit is. And the next one's gonna be Identity IQ. Identity IQ is very, very good. They have a lot of protection and things like that when it comes to letting you know what's going on with your credit. So first things first, pick a paid credit monitoring service, right? You gotta pay for it, but it's worth it. So get a paid credit monitoring service. It'll tell you everything that's going on with your credit. The next thing is credit. When you're applying for a car, when you're applying for a loan or whatever, most companies want to see that you have a good number of primary accounts. And what primary accounts are things like auto loans, mortgages, credit card accounts, personal loan accounts, student loans, any positive primary account that's reporting on your file. And that you want to have at least a minimum, and I say minimum, at least a minimum of 6 to 7. The more, the better. And that just shows that you can handle different types of credit on your report successfully, right? If you have an auto loan, you have a credit card, and you have a mortgage, right? You're juggling different types of credit services on your report, and lenders like to see that you are responsible with that. The next thing is going to be the age of your accounts. So obviously self-explanatory, the longer you've had the account, the better. So credit age goes back to your very first open line of credit or credit account that you may have. And then let's say you were to open one up today, then your youngest line of credit would start from today. And so that mixes in with your oldest line of credit up until the new one today. You can't really do much to control those, although you could add a few trade lines, but I won't get into that now. You can just pretty much just let it age out and age with you. The next thing is going to be derogatory items. So derogatory items are things like late payments, collections, charge-offs, bankruptcies, repossessions, anything that is a bad mark on your credit, right? If most people don't know, but just one late payment can drop your score anywhere from 50 to 150 points. And we get these all the time, right? They thought they set up auto pay, or their bank didn't have the sufficient funds, or whatever the case may be, right? But you always have to be on top of paying your bills on time. I mean, something we cannot stress enough when we're working on people's credit files is make your payments on time, because just one single late payment can stop you getting approved for so many different things, even if it's by accident. And late payments typically, now I say typically, they fall off every 2 to 3 years or so. And then the final thing is going to be credit limits. So your balances on your revolving credit, right? Your credit utilization. Let's say you have a $10,000 credit card and you keep a balance of $2,100 on it. Well, that's over the recommended 20%. And that will drop your credit score. It will have a negative impact on your credit score. It's okay to carry balances on your credit card if you're okay with paying interest, right? There's nothing wrong with that. Just keep in mind, if you're gonna be applying for something, you wanna raise your score to the highest score possible before applying for whatever it is you're trying to get. And so my recommendation is 30 to 60 days out before you apply for whatever it is, bring your balances down underneath the 20% utilization. So paying off $100 and putting you at $2,000 utilization with a $10,000 line of credit, that will keep you under that safety threshold and you won't have that negative impact on your credit report. So those are basically the main factors of what your credit score is. How to grow it basically is just keep monitoring it, keep adding primary accounts, right? Apply for credit cards. It's not bad to apply for a credit card. You don't want to get too many hard inquiries, which is basically anytime you have your credit pulled or you're applying for something that involves your credit, then you will get what's called a hard inquiry. You don't want to have multiple hard inquiries back to back to back to back because that can also drop your credit score, and hard inquiries typically fall off every 2 to 3 years as well. Now I say typically because it's not guaranteed, but that's typically how they work. So those are just your basic fundamentals of what your credit is if you're a United States citizen. I hope this video helped you out if you're trying to learn more about credit. Please be sure to like and subscribe and stay tuned for more videos from Credit Guys. Take care.